When the rest of the markets slow down, the futures market keeps moving. Did you know that CME Group S&P 500 and NASDAQ 100 futures trade nearly 24 hours with great liquidity? In the ETF markets, volume and liquidity lessens after 4 p.m. until the next morning. But with futures, you get trading opportunities both day and night. Learn more at cmegroup.com/equity-futures.
So there's a lot of noise about AI, but time's too tight for more promises. So let's talk about results. At IBM, we work with our employees to integrate technology right into the systems they need. Now, a global workforce of 300,000 can use AI to field their HR questions, resolving 94% of common questions. Not noise, proof of how we can help companies get smarter by putting AI where it actually pays off, deep in the work that moves the business. Let's create smarter business. IBM.
From coast to coast, unlock adventure at Red Lion Hotels by Sonesta, where restful sleep, friendly service, and local knowledge await. Whether for business or pleasure, spend less and make more of every trip. When you sign up for Sonesta Travel Pass, you'll get their best rates instantly. Go to Sonesta.com to book your stay and unlock their best rates with Sonesta Travel Pass. Here today, roam tomorrow. Join now at Sonesta.com. Terms and conditions apply.
Bloomberg Audio Studios. Podcasts, radio, news.
This is a breaking news update from Bloomberg. Instant reaction and analysis from our 3,000 journalists and analysts around the world.
I'm Alexis Christoforous, and these numbers just crossing the Bloomberg now. The Labor Department says the U.S. economy lost 92,000 jobs in February. That is worse than expected. We were looking at an additional 55,000 jobs. And of course, this is compared to January when we added 130,000 jobs. The unemployment rate ticking up to 4.4%. The estimate there was 4.3%, and the prior month was 4.3%. Checking wages month over month up slightly to 0.4%. Estimates were for 0.3%, and earnings year over year also a bit hotter, 3.8% versus the 3.7% expected. But again, the headline here, the economy lost many more jobs than expected, 92,000 in the month of February. Estimates were for 55,000. We also just got retail sales numbers out for the month of January, and they were down 0.2% versus the estimate of 0.3%. As for market reaction, it is swift. The Dow futures now down more than 400 points. S&P futures off 64. Guys?
Claudia, Sahm with us as we continue with all of our good work here. These are the kind of numbers, Claudia, where amateurs like me go, okay, that means diminished GDP. Is that correct? That all of a sudden's back to a lesser real GDP where we're on the Sahm recession watch?
So not necessarily, so clearly these numbers from February are not in checking the box on signs of stabilization in the labor market, right? We're losing jobs, the unemployment rate ticked up. This is not a good sign. This actually sits pretty consistently, especially if you look at the last 3 months, with what we saw all of last year. The U.S. economy last year created almost no jobs on net, right? And at the same time, consumer spending increased, business investment increased, GDP rose for the year on trend, right? We can talk about concentration, we can talk about what sectors it's in, but we have already been for a year in a jobless expansion. So unfortunately, what the February data, what this latest labor market data suggests is that's still where we're at. Right. And we had been looking for signs that hiring was picking up. And, the January employment report gave some signs of that. Yep. January still is a really strong number, even with down revisions. It's close to 130,000 still. But clearly to lose 90,000 jobs on net in February is a real problem.
Claudia,
we're not creating jobs. It's that question of, is it a problem? That's a whole separate, and this has been a really difficult conversation to have, but we've been in this for well over a year now.
So, Claudia, what do we know about the supply of labor? We know that this administration has effectively closed down the border, reducing supply of labor to some industries, whether it be housing, construction, agricultural, hospitality. What do we know with a year's worth of data here as to the supply of labor?
Well, the estimates with immigration come in. It takes some time. We have, updated estimates from the Census Bureau. We have updated estimates from Congressional Budget Office. They're pulling in a lot of different pieces of data. These are still in flux, but it is very clear directionally, and it's also very clear in terms of magnitudes. These are large downshifts in immigration, and immigrants have been kind of on the margin additional workers in recent years. So it does, directionally, this makes sense. And I think that is important to keep in context. These shifts in job creation, going from, hundreds of thousands of jobs created on net not that long ago to not creating any, and if maybe even destroying jobs on net in the U.S. economy, that is a dramatic shift. And the unemployment rate has drifted up. Yep. Right, we're at 4.4%. Yeah. So, we have to keep the magnitudes and the drama on the payroll side. It's not just about weakening demand; it is the supply, and that's a policy choice. But keep an eye on the unemployment rate has drifted up, and there is still a problem. This is not just about supply. We don't have enough demand for workers.
I mean, Claudia, to your point on a flat economy, I just did a 3-month moving average, folks, in the back of my HP12C.
Oh yeah.
And the bottom line here is we've generated 5,660 jobs over the last 90 days per month. I mean, I've never seen it. That's like a flat economy. I have Claudia quickly here. I mean, there's a lot of negative statistics, Claudia. What does the Fed do with this information if labor matters?
So they're watching all of this very carefully. I think the unemployment really does sum a lot of this up. The fact that, the unemployment rate did tick up. We're still at low levels, but it has been drifting up gradually. They're going to keep, this returns some attention to the downside risks to employment, right? This is all about the employment risk, the inflation risk. Today brought some of those employment risks back into focus, but this is still largely a labor market that looks like it's working relatively well. Not a recessionary dynamic, but a very unusual dynamic.
Okay, it's unusual, but I mean, there's a lot of people flat on their back in this country, Claudia, saying cut interest rates. If Waller and Company, Goolsbee and Company, Hassett and Company, if they cut interest rates, does that help the labor economy, or is it now removed?
Cutting interest rates is a way to stimulate demand, whether that's, consumers going out, making bigger purchases. They have to take out, on their credit cards, buying a home, businesses making an investment in equipment and software. It's a channel that can help. It is not all powerful. It's a very blunt tool. But, that's the tool the Fed's got. And it is very clear from this Powell Fed, they will defend the labor market if they need to.
Dr. Sahm, thank you so much for supporting us in your note and all your work with us. Claudia Sahm with us this morning with New Century Advisors. We said good morning here with the futures. -40 went to -60. Now they're back -52 on futures. The VIX out two big figures, 25.82. Be sure Nadia doesn't leave the studio here. I mean, she's going to see the VIX out that much and go, I got to go. Bloomberg Surveillance this morning, this Jobs Day. It's brought to you by IBKR. Will the year-over-year change in the U.S. CPI, will it exceed 2.6% this February? Turn your view into a trade at ibkr.com/forecast. Last trading day, it is March 11th. One of my favorite things. It's like the miserable winter. It was a great song. Arlo Guthrie sang it.
Oh, okay.
Northampton Winter.
Oh.
That's what it was like at Smith College. Joining us now, Nadia Lovell here from the Union Bank of Switzerland as well. What was the coldest morning at Smith College? I mean, there must have been one where you just said, this is terrible.
Terrible, especially since I'm from an island. So it was quite brutal.
Like you were not used to it.
I was not used to it at all.
So
but I've adjusted.
You were forced to study as well. Thank you so much for coming in. I just, with the geopolitical shock and with this economic data, someone with a measured view, do they just sit back and watch the show unfold, or is this a point of action for UBS?
I'm still in the studio. I didn't escape, although when I did see the numbers, I said, oh, this is not a good combination right now, particularly, because the narrative had been that there was stabilization in the labor market, and then this is causing questions to that. And it's a little surprising just given the data that had been coming through initial jobless claim, and also some of just a survey, Beige Book said that there was stabilization. So this is a little bit perplexing and put the Fed in an odd position at the same time that you have inflation risk rise and geopolitical tension. But I would say at the core, it's too early for us to fundamentally change our view. And so it's sort of stay the course, stay invested in this. Do we have to reassess some potential rise in risk around where markets could go in the next few months? Absolutely. In terms of do we want to take on more defensive positioning? We're not quite there yet. We need to see a little bit more data because we know that there's some dislocations and peculiarity that's going to also happen in the labor market.
Nadia, one of the challenges, I guess, for this market is that it's been led for the longest time by technology, information services, the names we all know, maybe the Mag 7, but broader than that. Those stories are now under pressure. The AI story's kind of morphed a little bit, and it's not just a net positive for AI. Now people are asking tough questions. How do you think about tech as a leader in this market?
We did downgrade tech and comm services to neutral. So that's an indication to us that is no longer going to be a leader of the market. Now, that's not to say that is going to continue to drag down the market. We do hope to see some stabilization in tech. The AI tailwinds are still there structurally, but obviously you've seen volatility pick up. And so you have to be a bit more selective in this area. It's not so much about the sectors, how you position across the AI value chain. Mm-hmm. That's a distinction that you're seeing because, the beneficiary of the CapEx spending has really been the semiconductors as well as the memory stock, but software is under pressure. And so we think that it's more about positioning properly across the AI value chain and not so much not so much about the sector as a whole.
Nadia Lovell with us, UBS Global Wealth Management. Thank you for publishing your target here for December, year-end, 9 months away, and it's a double-digit view. There's an enthusiasm here. How do you acquire shares given the hour-by-hour buffeting we're getting right now? Brent crude, $89.29. But you're basically saying into the next year, acquire shares, right?
Basically, and I think it's because, again, we know geopolitical risks and shocks, tends to be short-lived. And while they can cause some near-term volatility, we'll sort of see how things play out in the next couple of weeks in the Strait of Hormuz. And if the flow of oil can resume in a meaningful way, we think that if that happens, then you should see some normalization in energy prices. And that's why we think that ultimately crude oil, Brent, will get back down to $67 by the end of the year because there is excess capacity in the system. $67 Brent by the end of the year. Because we do think that there is, capacity in the system. What's causing the spike, we know, is just concern about the disruption near term. And we know that geopolitical risk markets tend to bounce back. Now, again, we'll see where, GDP kind of comes in. We know that there's consumer stimulus coming from the tax returns. Let's continue to watch the labor markets. And so when we look at the picture now, yes, this job reports does, cause us for a pause to reassess a few things. But when we look at the picture collectively, even before today, it felt like this economy was on pace for above trend GDP growth. And that's still our core view. And so if you have that as well as earnings growth at double digits and the broadening out, we all having that broadening out, right? I think you can get, to double digits by the end of the year. And we've seen that in past periods where you've had geopolitical shocks.
Going back to the first time Nadia Lovell went in the Iron Horse Cafe in Northampton, I've never seen a market/economy like this.
I know.
It's nuts. Look at the labor economy.
Yep.
We're flat on our back. That's the summation. And the GDP numbers are shocking.
Shockingly, they're hanging in there. So we have seen a rotation starting late last year out of some of the tech names that you were talking about into some more industrials and maybe small and mid cap. Is that something you guys embrace? Do you think that's a longer term trend?
Yeah, we have. And, we did upgrade industrials in the last month or so. And that really, again, it's playing into that, cyclical uptick that we do expect. You've seen it at ISM, manufacturing services all above expectations in the most recent numbers, above 50. And then you also have defense spending that we expect to continue to be robust and increase. And then the structural growth story that's happening in industrials is the electrification story and the build out of electrical grids and monetization and around AI. And so we do think that that cyclical story feels like it's still intact, and you want to have some exposure balance in the portfolio, not just structural growth, but also some cyclical.
Can you come in on Sunday?
Tom, I was working this past Sunday, so I can't be here, but I will be working.
Okay. I'm going to just rip up the script right now. Nadia Lovell with us out of Smith College, and I bust her chops, but we're talking double major mathematics, physics. Ugh. I want you to talk to everyone listening across this nation about the motivation necessary, all the biases against girls doing STEM, and it's improved. It's gotten better. What was it like when you chose to do mathematics and physics?
Thankfully, I did it at Smith, which was a quite supportive environment. Being able to look up to other women physicists at the time at Smith College. And I think that we continue to break those glass ceilings and to show that, women, just like anybody else, have the chops to do it. And I think that that's a great story to continue to tell.
Seriously, and I adore Mount Holyoke. That's a school name. Duke, folks, for these of you who don't know this, Duke Chapel Hill is sort of like Mount Holyoke Smith as well. But there's something about, and I'm talking my book here, folks. Afterthought did the all-girls thing. There's something about the nurturing environment. It's okay for you to do Newtonian physics in an all-girl environment.
Well, I think it's okay to do it anywhere, right? But yes, it can be a bit more encouraging when you're in a classroom with other women. I mean, people like to look up and to see what someone that looks like them doing the things that they want to do.
When you're in UBS and you're with some smooth investment banker who took marketing at some school, and they're looking at you and you're like, just shut up. I mean, what's it like bouncing off of Global Wall Street with your academic background?
Well, thankfully at UBS, particularly in the chief investment office, I would say a lot of us do have a very strong analytical background.
Yes, out of Zurich, that's definitely
so that is definitely the case. Yeah. And I would even say where I started my career, one of the things that attracted, at the time I started at Capital Group, managers of the American funds, and again, strong math background. Most people did have that. Yeah. And so again, encouraging environment.
Robin Wigglesworth with a great write-up on Capital Group, and that Active again really struggling, but Capital Group doing better than most there as well.
LA, TCW and Capital Group. Those are your two anchor meetings in LA.
This is great.
I needed to go to warm weather after Smith.
Yeah, exactly. Smart.
Nadia, thank you so much. Nadia Lovell from the Union Bank of Switzerland. I'm sorry, I always will call it the Union Bank of Switzerland, UBS, with us today. Thank you so much, Nadia, for coming in on Jobs Day. The markets deteriorate. Nadia Lovell driving the market lower, negative 77 on futures. We're at three big figures on the VIX, 26.90. The oil, $89. Brent crude almost up to that 90 level right now, up $4.55. We're going to get that at any moment. Let me go over CO1. Mr. Bloomberg taught me how to do this. CO1 commodity GIP that's about all I know. But then up we go, and we see if we have a 90 print yet on Brent crude. 89.99. Oh. Are you kidding me? Yeah, within a penny of $90 a barrel. We want to get Nadia in here to give Jennifer Lee time to really digest this economic data. Jen Lee is just spectacular at BMO Capital Markets of just slicing and dicing it and putting it together. In the 15, 20 minutes, Jen Lee, you've had to digest the data. What is the distinction you see?
My distinction is I have no idea how we're going to call this. Good morning. Thank you very much for having me on. I would like Nadia to talk to my daughter, by the way. My 14-year-old still can't figure out what she needs to do. And at the age of 14, you still don't know what you want to do with your life. And I was going to go all Asian tiger mom on her and say law.
No, you're an Asian. Are you an Asian tiger mom?
A little bit. Just a little bit.
That's awesome.
But in terms of the data this morning, definitely a bit of a shock. I was expecting a weaker U.S. jobs number, but I was not looking for a negative. So that was a little bit of an eye-opener. And, of course, you have the double whammy of a weaker retail sales figure. So this puts, the doves on the minority of the doves on the Federal Reserve right back into play. You had Waller, which I thought was interesting just a couple of weeks ago, I think, when he said that the next meeting would be a coin toss. And I was thinking, wow, that's an interesting little twist. But, I'm sure now he's going to be firmly still on the side calling for rate cuts. So we're going to see how all of this pans out. We are still, just for the record, we're still not looking for any rate cuts to come until probably June. We can't sort of take 1 month with a grain of salt. Always look for the revisions, and generally the revisions for jobs on the downward trend. But overall, it just shows softening U.S. growth. Tariffs, I hate to bring up the T word, but it's still out there. Tariffs are still a big source of uncertainty, especially now with businesses that are all sort of refocusing some of their efforts now on the possible refund process and how messy that's going to be.
So, Jen, I think the narrative or the consensus coming into today was kind of a no hire, no fire type of labor market. And maybe we can live with that for a while. That's not the worst thing, given where the unemployment rate is. Does today's number change that narrative at all?
No, again, obviously it's obvious that it's a little bit more softer than many people had expected, but at the same time, this is coming on the heels, of a downwardly revised figure in January, but at least it was still higher. So on net, we're still higher, but again, not a great report. But a 4.4% jobless rate. It could have been higher. It could have been higher than that. It was interesting, by the way, that earnings were still up 0.4%, I think, month to month, and 3.8% year over year. So people are still getting a wage. That the 95% that are still working are still getting a steady wage, 0.4% month over month. But they're obviously holding back a little bit, worrying about higher prices to come. This is when the whole affordability narrative comes into play as well. And now we've got oil. Touching on $80, I think, the last check. That's not helping at all either. So
you mentioned generally 4.4% unemployment. I mean, you come out of Waterloo up in Canada, folks, which is bulletproof statistics and math on economics. What I get, and I got this on my trip to Phoenix this week, Jen Lee, is just simple. America doesn't believe it's a 4.4% unemployment. With all the adjustments, hedonic this and technology and AI, what does this 4.4 statistic feel like right now? Like 6% or 7% unemployment?
It probably feels a bit higher. And again, you have to look on the flip side. That's still, over 95% of the labor of the population that is still employed, gainfully employed. So it's still relatively low. As your other guests have been saying, it's still somewhat stable. But again, heading higher. I'm always looking at things like the wages, at wage growth, because that ultimately is the biggest source of support for the U.S. consumer. Knowing that you have a steady income coming in, a regular paycheck on every other week, I think does wonders for your own personal, self-worth. So in the meantime, I think we're going to see some more pullback in this very uncertain geopolitical environment, economic environment. But that looks like the Fed is not finished yet, and they will continue to cut rates.
Paul, get one more in here.
Absolutely. I'm looking at the retail sales, Tom. I mean, I guess, Jen, it kind of coming in line with expectations. What do you make of when you see the retail sales numbers? What do you make of the U.S. consumer these days? I guess hanging in there?
Still hanging in. I mean, there was a lot of broad-based weakness, but there are still some gains in things like furniture, groceries, of course, general merchandise, building materials, but the other things like the discretionary areas such as dining out, which is what I always zoom in on, sporting goods, those were all lower. So again, just speaks to a little bit more of the weakness and the more cautiousness of the U.S. consumer. But again, it's just 1 month. Or a couple months, I guess, at this point, but more like, always look at revisions. And then we'll be looking at the more important all-encompassing PCE report that's going to be coming out, I guess, in the next few weeks.
Jen, we got to go to breaking news, but I just got one final question with the Bank of Montreal's Jen Lee as well. Should the Canadians be so desperate as to give up some of their young stars and draft picks to get Robert Thomas of the St. Louis Blues or my favorite Nazem Kadri? Do the Canadians have to go large here Friday as the trade deadline approaches?
You know what? You're wrong person to ask. You're going to have to ask all the other guys who are a lot more into this than I am.
When the rest of the markets slow down, the futures market keeps moving. Did you know that CME Group S&P 500 and Nasdaq 100 futures trade nearly 24 hours with great liquidity? In the ETF markets, volume and liquidity lessens after 4 p.m. until the next morning. But with futures, you get trading opportunities both day and night. Learn more at cmegroup.com/equity-futures.
Support for the show comes from Public. Lately, it feels like there are two types of investing platforms. Some are traditional brokerages that haven't changed much in decades, and others feel less like investing and more like a game. Public is positioned differently. It's an investing platform for people who are serious about building their wealth. On Public, you can build a portfolio of stocks, options, bonds, crypto without all the bugs or the confetti. Retirement accounts? Yep. High yield cash? Yes again. They even have direct indexing. Public has modern design, powerful tools, and customer support that actually helps. Go to public.com/market and earn an uncapped 1% bonus when you transfer your portfolio. That's public.com/market.
Ad paid for by Public Holdings. Brokerage services by Public Investing. Member FINRA SIPC. Advisory services by Public Advisors. SEC registered advisor. Crypto services by Zero Hash. All investing involves risk of loss. See complete disclosures at public.com/disclosures.
So there's a lot of noise about AI, but time's too tight for more promises. So let's talk about results. At IBM, we work with our employees to integrate technology right into the systems they need. Now, a global workforce of 300,000 can use AI to field their HR questions, resolving 94% of common questions. Not noise, proof of how we can help companies get smarter by putting AI where it actually pays off, deep in the work that moves the business. Let's create smarter business. IBM.
If you follow markets, you know the value of long-term thinking. You plan, you diversify, you prepare for volatility. But in life, even the best strategies can't prevent every bad day. A fire, a loss, a disruption that demands immediate attention. When that happens, what matters isn't just what you planned, it's who shows up. That's where Cincinnati Insurance comes in. For more than 75 years, they've helped individuals and businesses navigate life's toughest moments with care, expertise, and personal attention. Together with independent agents, Cincinnati Insurance focuses on relationships, not transactions. Their approach is grounded in experience, follow-through, and trust built over time. Bad days happen, and when they do, you deserve an insurance partner who understands risk, respects what you've built, and is ready to help you move forward. The Cincinnati Insurance Companies. Let them make your bad day better. Find an independent agent at CINFIN.com.
Ryan Reynolds here from Mint Mobile. I don't know if you knew this, but anyone can get the same premium wireless for $15 a month plan that I've been enjoying. It's not just for celebrities. So do like I did and have one of your assistants switch you to Mint Mobile today. I'm told it's super easy to do at mintmobile.com/switch.
Upfront payment of $45 for 3-month plan, equivalent to $15 per month required. Intro rate first 3 months only, then full price plan options available. Taxes and fees extra. See full terms at mintmobile.com.
This is Jacob Goldstein from What's Your Problem? Business software is expensive. And when you buy software from lots of different companies, it's not only expensive, it gets confusing, slow to use, hard to integrate. Odoo solves that, because all Odoo software is connected on a single affordable platform. Save money without missing out on the features you need. Odoo has no hidden costs and no limit on features or data. Odoo has over 60 apps available for any needs your business might have, all at no additional charge. Everything from websites to sales to inventory to accounting, all linked and talking to each other. Check out Odoo at odoo.com. That's odoo.com.